Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. A week that has brought wheat as the leader. We're going to take a look at that. We're going to look at some weather concerns and also what's going on in the cattle market. And I know, hard to believe, but next Wednesday is a new month. We've got a lot to unpack on this week's episode, so stick around. More's coming up after this.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
And welcome back once again. Joining us is Sue Martin. Sue is with Ag and Investment out of Clarion, Iowa. But you can see Sue's just a box today. Some technical difficulties with her camera. Everything else is working, so we'll get to be able to at least hear what she has to say on the markets. And then joining us, Darren Frye as well with Water Street Solutions. And I first want to kind of have you guys give me your takeaway as you look at the week as a whole, just in a couple nutshells. What did you see were market movers? And Darren, we'll start with you.
Okay, well, thanks for having me on. This past week, we saw wheat be the leader. Corn and beans tried to tag along, but can't break out of their sideways congestion. And I think Chicago wheat reached some important targets this week up in that 630, 635 area. And we saw some profit taking and maybe some selling, some hedging up in that area as wheat closed 12, 13 cents off its high in Chicago. Kansas City held in there, so still concerns over that crop and conditions last week. We'll see what new conditions are on Monday. And then over in the livestock, cattle had a really great end of the week. A Thursday reversal, little follow through today. So a good finish for them overall.
What about for you, Sue? What were your nugget takeaways from this week's trade?
Well, I had some cycle window timing coming in on Sunday night, Monday, and the wheat market, it was on wheat and it was on soybeans and corn and on cattle. And the market managed to put a low in on the wheat and turn higher on Friday. And then we excelled in power or extension of power all the way into the one we had for yesterday. Now, the market reached today on KC wheat up against a 200-day moving average. And we haven't been against that 200-day moving average since August 2nd, when we started to come and get a nice rally. So in fact, actually, August 2nd was when we broke through for the first time below the 200-day moving average. So this is the first time at it. The market might try to hesitate here, but with a weekend and the concern over the Middle East war and the weather in southern Russia, and which accounts for 40% of their wheat crop, also the concern the weather could be moving, the dryness could be moving more towards Kazakhstan. I think that's kind of what helped push us, propel the market. It had been grossly oversold. And of course, managed money was heavy short and has been for a very long time. And I think they started to come away from the market.
So let's talk about this wheat market, because I know this wheat has been kind of the leader this pretty much this entire trading week. Darren, as you look at what's going on with the wheat, is there concerns? What do you see as a takeaway? Why are they such the dominant one?
Well, I think it's what Sue said. Really what happens in Russia and the Black Sea area really sets the tone for world wheat prices. And we've seen two big crops out of Russia, and that's kept wheat really pushed down to the lows. And of course, funds have been big shorts, and they've been big shorts for quite a while. And now you're talking about a crop in Russia that could be not only sub 90, but more like could be sub 85. And some people are getting that low if we don't see a weather pattern change. And so that's going to get the funds really nervous, along with some of the crop ratings out of our country has allowed these wheat markets to move higher with short covering. And that's what we're seeing right now. But that could turn into buying at some point that's more than just the funds getting out.
So as we take a look, and my camera has decided it's going to freeze me and not take you out of a solo. There we go. The Chicago market, the poor trade with them, is that something that's going to continue into this new week?
Is that for me? Oh, Sue.
Who
Either one of you.
Okay. Well, I think that the leader has been the KC wheat, the hard red wheat. But that's because, first off, normally the spread between Kansas City wheat and Chicago wheat got extremely close. In fact, within the past month, it was even money almost. So normally you will have Kansas City wheat taking a good carry to the Chicago. And then you have the VSR setting in for the Chicago wheat. So I think when we look at the wheat, lots of rain coming through the eastern corn belt. Indiana's very wet in their wheat areas. But this could lead us into some quality issues, and the market has a hard time addressing that. But in the meantime, it'll show up in crop condition ratings, which last week, I think the condition ratings really surprised many. And of course, I think the Chicago or the KC wheat, I think that market is still got some room. If we can get through this 200-day, we might back up from it and then charge it. But I think the market seasonally tends to rally into mid-May anyway.
So, Darren, as we look at the safrinha corn crop, I know that they've had some weather concerns down in South America. They've had some insect concerns down there. What are you hearing from the folks that you talk to down south?
Yeah, I think the stunt disease and what's happened with that second planting of corn in Argentina is quite concerning. I think a lot of your privates are between 46, 47 on the low end, 52 on the high end. We still have, like the Buenos Aires grain exchange is 49.5 with USDA being in that 55 range. We got to see USDA come down, and I think they will on this May WASDE. But I think that's a real issue, some severe losses in certain states down there. And then, of course, Safrinha, I think it's good in Mato Grosso, Goiás, but in the central part, Paraná and Mato Grosso do Sul, maybe even parts of northwestern São Paulo, we do see that they've been awful dry. We've been warm overall, and I think that crop will end up being marked down closer to 115 than where USDA is currently. So that could add some fodder to the corn market for sure.
What are your takeaways, Sue? Let's start with you on the soybeans as we get ready to head into a new week and, believe it or not, a new month around the corner. What's going to be your takeaway on this crop?
Well, I think first off, the rumors in Chicago that China had been buying beans this week and bought at least 30 cargoes. Granted, I suspect most of those are in Brazil when they come out of harvest or heading down towards the end of harvest. But I think that the bean market, when I look at it, it looks to me, yes, we're in a range. We're marking time. We could spend a lot of May in this range if we so wish. But if we do, I would expect a low to be solidified. And then we head into what I would call the election year rally for June into July. And I think our low there would start at the end of May, possibly early June.
All right, I want to switch gears for a minute and Darren, talk to you about this cattle complex. We were talking before we went on the air, above the 100-day average for this cattle market. Wednesday is a new month. It's hard to believe May is already going to be here. What is your thoughts on this cattle complex?
Well, we had a positive close technically. I would have liked to seen a close in June over 178.80. That's the last swing high. But certainly we got within about 20 points of that. We did close above the 100-bar moving average, as you mentioned. And I like that. I think that we have tight numbers still. The real question is, I know exports have tailed away, but domestic demand's still good, and we need to see the box beef price take off. Seasonally, it typically does in May into June, but so far we haven't seen that happen. I think once that does happen, if it happens, then the cattle have some upside room. But I think the cash market turnaround on Thursday, the bullish engulfing day we saw yesterday, follow through from today, bodes well as we move into next week.
So were you impressed or not surprised at all then, Darren, when you saw the way the cash traded midweek?
I was kind of surprised. Thursday, the market didn't know what it wanted to do. It was down, it was up, it made new lows, and then it rallied $4 to close really strong. And that was all because of the choice and select at noon and the cash market that came on. And so that was really helpful. And we saw follow through today. We didn't see it revert back and close poorly. So I really like the fact that it closed well for the week. And I think that bodes well as we start a new week. The only consternation I have is the end of the month. We'll see what the funds do. But after Wednesday and we start a new month, I'd be looking up here in cattle.
All right. Now, Sue, talk of a consumer demand. I had read something earlier in the week that there was going to be kind of the way down factor on this hog complex.
Well, I think that when I look at the hog market, you know, here again, we've had lots of disease in our US market. PRRS is pretty prevalent. And you've got, we're exporting pork, and you've got China who's dropping in numbers, and their prices are going to start to, you know, push higher, and they're down about 7.3% from the end of the year. And I think that when we look at Europe, they've been enduring for some time African swine fever, and so their exports have really dropped. I think we've picked up European demands, their customers. I think we've gotten some of that demand. But the hog industry also, I think, is in a contraction. And when you look at the cold storage report, our amount of meat, be it whether it's red meat, beef, pork, chicken, you know, the only thing that's got more in storage or cold storage is turkeys. Everything else is down appreciably from a year ago. And I think that's kind of concerning when we are moving, because that's proteins. And you look at this immigration that's coming in, they're protein eaters, almost all of them, unless they're Muslims coming in, they're protein eaters.
All right. Well, I know our time is up, unfortunately. I appreciate both of you guys taking some time to talk to us this week as we continue with this week's episode of the Nebraska Soybean Board Weekly Market Roundup. A quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that is this week's Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff.